Hi guys, Tim Melvin coming to you on a Monday morning. Sorry, I did not get time to get a video done on Friday. We had kind of a little tropical system coming in here, just dumping a whole bunch of rain real fast. In fact, the ditch out front here now is so full that I'm pretty sure we could stock it with bass and have a fishing tournament relatively easily. So anyway, no damage done. System came in, branch fell on the fence, no big deal. Dumped a whole lot of water and just a lot going on. Didn't get a chance to get a video done, but here it is. It's Monday, and we're going to set some time aside to get something up. Busy week last week. We kind of had hoped for a bigger sell off than we saw. Oh well, markets don't really care what I think anyway. I know that the commentary is still this week running along the idea that the Fed's already started to make an impact and inflation is peaking and the economy is going to weaken and we won't have to raise rates as far as fast. Guys, I'm sorry. It's a nice thought. The data does not support it. It supports exactly the opposite. Consumers are whining, they're complaining, but they're spending. There is some wage inflation. Wages are coming up, not, however, as fast as the inflation rate is rising. So consumers, rather than cutting back, because that, after all, would be completely un-American, they're continuing to spend at the same pace as they were when they had stimulus money coming in. Unfortunately, they're using up their savings. 5 months in a row, savings have declined. And credit card spending is not just higher than last year, guys. It's 25% higher than it was in 2019, according to JP Morgan and Bank of America, two of the largest credit card issuers in the United States. So we're going to go along. We're going to use up our savings. We're going to use up our credit balances. And then 6 to 9 months from now is when Jamie Dimon of JP Morgan says consumers will start to run out of money. Then we could see what he is calling an economic hurricane. Now, like all hurricanes, you just don't know how strong it's going to be. It could be anything from a mild recession to an absolute global economic disaster. The seeds of that are there, by the way, folks, very much so. For now, in the short run, the economy is doing fantastic. We had a great jobs report on Friday with 390,000 jobs, way more than the economists thought would be created in the month of May. There's 11 million open jobs in the United States. So college grads, take note. This is a great time to be going out into the job market if you got the right skill sets. Now, if you took theoretical philosophy or something along those lines, I'm not sure how much good that's going to do you. But for everybody else, I think there's jobs out there. Unemployment remains very low. I don't see that changing. And all of this is starting to spill over, guys, with you've got this surge in demand for just about everything that started last year and has continued on into this year. And it's creating some problems. We've talked about a lot of the shortages. We see food shortages coming up later this year. But copper right now, and copper is used in just about everything. But the massive demand increase from electric vehicles and renewable energy is creating a massive shortage in this stuff. Copper kind of goes in to everything. So this is pushing inflation right up, right along. Fed's in a bad spot right now. It's tough to cut inflation when there's shortages, physical shortages, and the economy is humming along and consumers are spending. Um, Fed has says repeatedly that inflation back under 2% is job one, and they're not going to worry about market fluctuations or short-term economic weakness. Now we'll see how well they hold that pledge when they're getting regular calls from the White House and from Congress to please do something because people are starting to lose their jobs and the economy's bad, and we'll see. I think that they have to get inflation back under 2%. Inflation is the worst thing that can happen to an economy, and if we get into stagflation, well, those of us of a certain age remember just how unpleasant parts of the stagflationary environment in the 1970s were. So again, Fed chair, absolute worst $200,000 a year job in the world right now. We still, guys, the biggest shortage is one we got to talk about. That's energy. You still got that supply demand imbalance. It's not going away. Read some OPEC data this morning that said demand is increasing for globally for oil by about 3.4 million barrels of oil a day. Unfortunately, supply is only growing by 600,000 barrels of oil a day. And you can also now back out Russian and Ukrainian oil, and the supply issue becomes even bigger. Okay. So there's a very serious supply and demand imbalance, and it's simply not going away anytime soon. Again, energy is a cost factor in just about everything out there. If their energy's higher, everything's going to cost more. Again, making the Fed's job all that much more difficult. This is not a great time, guys, to be owning unprofitable hopes and dreams, large cap growth stocks. They each tick up in the interest rates makes those companies that much less valuable, which means, by the way, you should probably avoid the indexes too, since they tend to be dominated by those types of companies. This is also a very difficult environment for people investing for income. So if you're retired, near retired, or you just prefer to accumulate wealth using high dividend strategies, this is a really hard time to find attractive investment opportunities. You go out, you buy something, rates go higher, the price of what you bought goes down. It's just not a lot of fun. So what we're going to do is we're going to come back here. We're going to combine yield with insider buying in business development companies that have built-in inflation protection. We want to have a large percentage of the loans in the BDC be floating rate, so that if rates go up, so do the payments that the borrowers are paying to the BDC, which then passes that money onto us. Now, combine the fact that in the two income-producing investments I'm going to talk to you about today, the insiders all have extensive experience in not just leverage lending, but private equity, leverage lending, certainly alternative investings. They've been in this business for a very long time. They know it as a borrower, they know it as a lender, they know it as a buyer, they know it as a seller. So the first one is one that I've talked about several times, and I'm sure I'll talk to it about again and again and again, because it is one of my absolute favorite business development companies, and that's FSKKR, the symbol's FSK. Now, 80% of this portfolio, guys, is floating rate in nature. The rates go up, so do the cash payments to the BDC, so do our dividends. The big story here is you have the team managing the BDC has access to all of KKR's credit and investing resources. They can talk to the analysts, they can talk to the underwriters. They also have access to the Rolodex. And for those of you not of a certain age, a Rolodex is a print version of a contact list that's like the one you have on your cell phone. So they're going to see deals and talk to borrowers that nobody else is going to get to talk to. And they're very picky. Last year, for example, they looked at 1,600 deals. Only 345 of those proposed loans actually made it to a discussion at the regular meeting of the investment committee, and just 87 of them were funded. They're very picky. They're very careful about who they want to lend to. 87% of the loans here are floating rate, paying a 12.6% dividend yield. And guys, this thing's trading at about a 20% discount to net asset value. It was created by a merger of two smaller FSK BDCs last year, and the market never really kind of got what was going on here, paid a lot of attention to it, in spite of the fact that it's the second largest business development company. I like it. I like it a lot. I love the management team. I love the association with one of the most successful private equity firms in history, and FS Investments, which is a wildly successful alternative investment company. So great partnership, fantastic dividend yield, lots of upside of about 25% just to get the price back up to net asset value, and built-in inflation protection. Now, the second one, and by the way, lots of insider buying recently. The next one is Ares Capital. That's ARCC. Ares Management is a very large private equity firm that was started back around 2000 by people who had extensive experience primarily on the private credit side. The firm has expanded. Now it does private credit, it does private equity, but they are one of the best credit investors in the country today. And they are the sponsor and parent company of Ares Capital. This BDC has a very strong portfolio, guys. It's ridiculously strong. The symbol's ARCC. They're very defensive in nature. They like to lend to industries like software, like healthcare, just industries that have recurring services over and over and over, almost regardless of what the economy does. When you look through this, you will find no cyclical companies in the loan portfolio. There's no steel companies. There's no forest products. There's no airlines. There's no shipping companies. If it's subject to wide swings based on economic movements, Ares Capital wants no part of it. It's not in the portfolio. This thing's yielding about 8.6%. It is right now trading at a slight premium to net asset value. So I wouldn't be a buyer of this until we got a pullback of 5% or more, and we could get it at least at a small discount to net asset value. But I do really like the management here. I love the defensive philosophy. So having it in an alternative income portfolio makes a lot of sense. But hey, price is everything when you're investing for the long term. And the better the price you get, the higher the dividend yield you lock in. So wait for a pullback, a little bit of a messier market to start accumulating your shares of Ares Management. Now, also, I ran across something on the insider buying side, and this is way out of left field for me because I'm not a crypto guy. In fact, I'm something of an anti-crypto guy. I really believe that at some point the governments of the world will look around and say, we have no interest in a competing security. Let's shut this down. But good chance I could be wrong. It's not like I've gone out and talked to everybody in crypto. Just not a fan of the stuff. However, I did notice that the company called Applied Blockchain, APLD is the symbol. And I said, I'm not a crypto guy, but they're doing data centers that will have energy sources from solar or wind or old coal fire plants, whatever it is, dependable energy sources, um, to host crypto miners. They have 55 megawatts online now, 45 megawatts under development, with the goal of 55 gigawatts of total power to provide for Bitcoin miners over the next 5 years. Now, I still probably would not have been interested, but the co-founder of this and the guy buying all the stock is a guy named Wes Cummins. Now, Wes sold his registered investment advisory business to B. Riley, and he's currently the president of B. Riley Asset Management. Now, B. Riley is one of the best research and investing firms in the small cap universe. They're based out in LA, stay on top of their research and track their ideas and made a lot of money with these guys over the years. And when there was heavy buying in B. Riley itself, BRLY, we stepped in and we kind of coattailed the insiders there and we made some money. I think this idea of data centers for Bitcoin miners, as long as they're mining for Bitcoin or whatever it is they're doing on the blockchain, makes a lot of sense. As I said, I think someday crypto comes to an end, but I don't see it happening overnight. You're going to make a lot of money renting space and co-location space to Bitcoin miners, particularly if you can provide a reasonably priced power source. And that's kind of the whole idea here at Applied Power. Anyway, you want to just have a little bit of exposure to crypto without actually owning crypto, with management that seems to really believe in the company. Mr. Cummins has bought over $2 million worth of stock since the company did a stock offering and uplisted back in late April of this year. That's a little aggressive. I wouldn't put my net worth into that. But you know what? When you got that kind of buy-in by a guy that is pretty smart, that probably knows more about the market for blockchain certainly than I do, it's worth putting a little bit of money into it because it just might pay off big. Now, finally, the insider buying, dividends, banks, they go together, right? And we always try to give you a nice high-yield bank, high-yield bank. And this one is one I think I've talked to you about before. It's Northrim Bank Corp. The symbol's NRIM. It's up in Anchorage, Alaska. Got 17 branches with about $2.6 billion in assets. Perfect size for anybody that ever wanted to enter the Alaskan market via takeover. Don't really think this is a strong takeover candidate, but it's a bank, so anything is possible in the current environment. These guys are going to be a major beneficiary of higher oil and gas prices. That's going to create jobs in Alaska in their core markets. It's going to create loan demand in their core markets, housing demand in their core markets, all of which is great for this bank, which, by the way, is already doing very well. They just raised the dividend. You got about a 3.81% yield. Over the last 5 years, they've been buying back about 4% of the bank every year. So you have a very attractive shareholder yield of over 7%. And again, you've got very consistent buying by officers and directors all year long. It seems like every time the stock pulls back, they're buying several hundred or several thousand shares, increasing their ownership position in the bank. It's only trading at 8 times earnings, expecting a pretty big jump in earnings this year. From the analysts that do follow the stock, think that you could get earnings growth of over 25% in 2022. This all adds up to a super attractive, relatively low risk proposition in a very well-run bank up in Anchorage, Alaska. So anyway, we've given you a lot this week. We've thrown a bunch of stuff at you in, just a little bit under 15 minutes, but some solid ideas, some great income plays, and a play on cryptocurrency that is going to take place via real estate and co-location data centers. So some ideas to chew on. Hopefully, there's some stuff there that can make you some money. I'm Tim Melvin. I'll talk to you again either Friday or next week when we get to it, depending on what is going on. So anyway, thanks for listening, guys. We'll talk to you soon.